Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday, and today was a pretty eventful day, right? We opened up, I think, down, about 7-8 handles. Market tried to rally, and then, around lunchtime, there was some news that the 40,000 Russian troops might be heading into the Ukraine, and you had a big sell program, and some say that was old news, and everyone's debating about what caused it. But meanwhile, market wound up pretty much getting pressured, slicing through a lot of levels from earlier that day, and even getting below Friday's low before coming off those lows. As a trader, what you want to do is you want to react to the action, and when you're in a certain environment, you don't want to be too deep so you can react. And the environment we've been in has been under pressure. We talked about the upper level breaking, the intermediate level breaking, and now trying to figure out, will this lower range hold? So when you're trading a lower range, there's no need to be a hero, no need to have huge size, because you know what, we're a little oversold, so being short is kind of hard, but we're not drastically oversold. The same way if you're testing longs, you better have enough liquidity where if it's not the level that's going to hold, you get out of the way and just keep taking trades, and that's basically what's been going on here. I'm going to start through just going through lots of charts because I don't have a lot of time. First things first, you take a quick look at the spiders. This is when water pistol to Capesa call, when we went below the 8 and the 21-day time to reduce risk. Then you had the moment to get out of Dodge or get short when it broke the 50-day, which is right here. And now this is where we are. So the question is, what is next? And some of us were thinking that maybe, we could have continued above yesterday's high and retested the 50-day. Didn't happen. We opened up lower, hovered in there, broke below 192.05, which was one spot to maybe reduce, and then you saw us get below 191.57, but then we closed up right around both of them. So it's showing you that the market's not ready yet to go down further, that you still have two-sided trade. And this type of trade is hard because you have to short resistance, buy support, take trades, and that's not what a momentum trader does, but that's the environment we're in. If you reduce risk here or reduce risk there in these spots, you could test some spots. And right here we're at the 100-day. I try and look at some past little corrective phases to figure out what they looked like, and trying to figure out, like, was this one in April similar? You had finish on the lows, rally up, test the lows again, and then close above the pivot. Okay, not really the same there. In the beginning of the year, if you remember, we started off really weak right here when we broke this accelerated moving. Remember this accelerated channel, broke it quick, bear flag continued, and then you had a 1, 2, 3-day move before closing above it with authority and then penetrating and getting rid of this red bar. Have we seen that yet? No. Okay, that was also at the 150-day. So at this point, there's really not too much to base where we are here, except for it does feel like we're losing some sectors, or now already at the 150-day or 200-day or below. Also at this point, I remember last time, we were correcting. You didn't have as many geopolitical news as you have now if you come back to me, because I do have a pretty nice haircut today. You have Germany well below the 200-day, which to me is a little surprising and gives me a little bit of a brushback on trying to be too long at times, because I don't think anyone thought the EWG would be down here, this was your accelerated trend that broke, your retest, and look where the 200-day was, where a spot to navigate, and now closing on the dead lows. So this has not found a friend. So, it looked great, and when things change, and when trends change, you change. Okay, when things break their 8 or 21-day moving average, that is your spot to reduce risk, so you could try things perhaps a little bit lower. And who knows, maybe the EWG holds around here or around there, and if you did sell someone when it broke this trend line or this trend line, you have the chance to get back. If you sit there and hold your nose and go underwater, you're probably looking at the headlines and you're disgusted. Okay, but traders right now could actually trade a little bit. Okay, then you had DeMark with his top call. Now listen, nobody knows if he's right or wrong. All I know is if you were trading the FXI as a swing position as it held the 8 and the 21-day, maybe from here, where I remember when it gapped up here around 35, and it's really pretty much been steady since. You reduced a little bit today, or you reduce if it breaks this 40-35. The problem is it happens overnight sometimes, so you might be stuck. But at this point, when everything's being pressured, if the the Shanghai happens to correct, and we have seen it touch the 21-day, you need to be prepared that you could, be down $1 from where you're at. If you can handle it, great. If you can't, you reduce it, and who knows, maybe we do touch the 21-day. Overall, I still like the weekly, I still like the monthly, and I still think that it could continue to go. It's just look where it came from. This was the low in 2014. It's had quite a move. So, upper level support is different than intermediate support. Depends where you trade or what time frame you're on. Now you go back to some stocks. You look at Apple. Apple's interesting because it tried to break below this trend line, a trend line that it's been following. But then there was some news that I think they're going to have their event day on September 9th versus 16th, which to me is positive news. So it went from trading below 94.81 to closing above it. So a lot of guys were like this to me. They say, red dog, what happens if, I don't know what the catalyst could be, but what happens if Russians leave the border and something happens where we gap up 10, 12 handles? Don't you have to be in something in the market? I'm like, as a trader, you don't really have to be. But if you wanted to be in something just in case and you have an Apple thesis, which I have an Apple thesis that I do think the highs aren't in for the year, I'm like, you know what, maybe I'll take some Apple, but I'm going to be short the spiders because I do think that I can't have confidence to say the summer low is in based on the action that I'm seeing. So with that said, I bought a little Apple near the close of the day, and we'll see, because if the spiders do open down, I have a chance of Apple to maybe show a little relative strength, fill the gap, and I could salvage the trade, versus if I said I'm just playing for a gap up in the market, which I don't know why it would happen, and then being in the spiders long for market exposure, and then we gap down, we have a gap and go to the downside, and that would hurt with no way out. So anyway, I am long some Apple in the VTF. It's not compelling, but it could be something, okay? And it's still above the 50-day, and it's still holding higher than most other names. Facebook still looks okay. I don't have any overnight. I had some last night. It tried to show a little relative strength. I thought maybe if we held in there, it could break above this. It hasn't. It's still above the pivot from before, so it's still okay. This is one of your go-to names still. Twitter gave a nice cash flow trade. This went from negative to positive, and a lot of us actually didn't have it overnight here because it closed in the lows. So this morning with the futures lower, it turned into a nice trade. Okay, now maybe it goes sideways and at some point perhaps takes out this small area. It still has a big gap here. It's still above the 8-day, a green bar on a red day. So that makes sense. So I have a little Twitter. Okay, you look at the 5-minute chart just to see if you were prepared in the morning. That's where I made the majority of my money early on because look at that. You had a big gap down, showed relative strength, and you could have been a buyer here. Let's go to East Coast. Because East Coast will get rid of that gap. So here's your gap down, okay, and that was your spot, and then it came up, showed some commitment to this, and then gave you another push, and then that's when resistance started to come in, and it wound up heading down, whatever. So this could have been your active stop. So a nice little day trade if you were looking for a day trade, and if you're holding some swings and you're like, I need to have some Twitter exposure, today was at least your first signal that could be it. It tried to do it here and then didn't happen, so at least now you have today's low as a stop on Twitter. Tesla went all the way back to the prior highs and failed. I was in it. I don't have it overnight. It still looks okay, but this one is very loose and wide and just something that I didn't feel like holding. At some point, perhaps we'll be able to get a trade above this 244 in a better market, but right now we're not quite there. Maybe some sideways action, holding higher would be good. But ultimately stronger than weaker. eBay, I don't know what's cooking there, but something's, making it act strong. It's come well off the lows. It's got a nice little bull flag. It was green in the market that was red. People were pointing it to me all day, so I took some of that. So I'm in a little eBay, little Twitter, little Apple, and I'm short spiders. Because in my head, to be honest, I do think that the spiders at some point, which I would love, okay, will be testing this area. Okay, I don't know when. We could be in here for a little while longer. But I'm not coming out with a public water pistol to base a call because I did that here. I'm not ready to do that here yet to say that I think we see 188.50 before 199.50. I mean 195.50. But if you're watching this, maybe I'll say it does feel like we see 188.50 before we see 195.75. So I think 2.5 maybe points lower before retesting, but I'm not sure. So. That's why I have a few longs on, very few, and a pretty sizable hedge, just in case. You look at something like Google that's been weakening. You know, it broke this spot right here, which was a momentum spot out, which was 590, gave you a small bounce yesterday and came right back here. And now it's not looking like, you know, you need to be in a rush. And if it were to break this, it could actually even go lower. Netflix, not much to report here either. You know, I have a bunch of chop suey here from olden charts, but this was the level of support, I guess, that gave you that red dog reversal going across. And it's still hanging in there, but you know, really loose and wide. It's, I guess, something to watch. Priceline gave back some of the prior day's gains, but then kind of held in there. I think it gave back a little bit more than you would have wanted as momentum trader, but bounced at the end of the day. Maybe at some point, if the market gets better, it builds a bull flag to go. Let's see what Expedia did since it broke out. Actually, see, this one's actually holding up better, right? It's holding the top end of this range, so if anything could hold up, you know, maybe that can. And then something to be a little concerned about is, you know, Intel coming into the earnings gap. So that lost its go-to status. Okay, and it was a little bit of a trap too. You had a green bar, then pow. So we'll see how this fills that gap. You know, that might, you know, give some people some skepticism that Microsoft just can continue higher. Here is this lower range, so see what happens. You know, I guess trade against this spot. The bank's still not showing anything worthwhile. This was your upper level stop, which we talked about. Came back in. Some news that, you know, they're looking at the dark pools in Goldman and Morgan, whatever. Didn't fall apart, but, you know, it still could come a little bit lower. The XLF is below, you know, this recent channel. This was a nice channel. Here was your little ascending spot to get out of the way if you were quick. And then here is when it broke this, and now it's trying to hover below, but the longer it stays below, the, I guess, you know, the more or the higher the probability you could see the 200-day. So, you know, with all that said, you know, each day I feel like we're losing a little bit or losing some stocks that I have a somewhat excitable thoughts and for their patterns. So when that's the case, you know, it seems to me that we have more work to do to the downside. The question is, how many days do we stay in this lower range? And, you know, if you're not seeing it, you do less. If you're buying dips and selling rallies or shorting, you know, when it looks good and buying it when it looks bad, that's cool too. You know, we've had some day trades. You know, yesterday you had some stocks go that were strong in the morning that extended. Hopefully you didn't take too many home because that could have been complicated this morning. If you didn't this morning, there were some things that went green, not a lot of them. You know, Twitter being one of them for cash flow. So there are things to do, you know, depending on your time frame. There's lots going on out there. I don't think you need, it's hard to be really short here too, considering we are oversold. And the same way it's hard to be, you know, in multiple positions. So just do less until we get to more compelling areas that have more clarity and you see more stickiness. You know, today we could have closed on the dead lows, or we could have closed at 192.50 in the spiders. It was a coin toss, you know, in the last 15 minutes, and I don't like to play a coin toss. I like when it's calculated. I like when there's an edge, and right now, you know, I think everyone's feeling a little bit more neutral to negative, but we need to wait for a pattern to develop so we could press that potential bear flag for lower prices. You know, there were some people pointed to the IWM, which I'll put up quickly. You know, it did hold this lower range, which I guess is a start. It tried to reclaim the 200-day, couldn't yet. We'll see what happens tomorrow. Here's your support at 110, and then you have really, really big support down here at 108 and change. Bears will roar if this spot gets broken, but if that's going to happen, it's going to have to do this first. We'll see what happens tomorrow. So hopefully, you know, you're enjoying your summer. The last thing you want to do is lose money at your desk when you could be having a good time at the beach. So figure out where you want to be and how you want to do it, and hopefully you're doing it in a way that you can make some money and not too frustrated. Have a great night. I'll see you tomorrow.